Today is Sunday, 9th of June 2025, 6 a.m. Eastern Time. This news is brought to you by Preeti Capital, your trusted source for financial insights. The current trends in the S&P 500 reveal a mixed picture with respect to its short and long-term moving averages. The index shows that 74.2% of its components are trading above their 50-day simple moving average, while 47.4% remain above the 200-day average. This indicates a stronger short-term bullish sentiment among investors, though the long-term outlook remains less robust. Sector performance over the past week highlights divergent outcomes across different areas of the market. Notably, the real estate sector posted the most significant gains, rising 1.02%, while consumer staples and utilities also experienced positive movements, increasing by 0.6% and 0.31% respectively. Conversely, the energy and consumer discretionary sectors faced the most substantial declines, with decreases of 1.41% and 1.42%, respectively. This suggests potential headwinds in areas sensitive to consumer demand and energy price fluctuations, while defensive sectors showed resilience. The RSP to SPY ratio, a measure comparing equal weight to market weight performance within the S&P 500, dropped from 0.301 to 0.299, marking a 0.56% decrease. This slight decline may indicate a shift towards larger cap stocks, as investors possibly seek refuge in more established companies amidst market uncertainties. The current market landscape underscores a cautious optimism with a preference for stability, as evidenced by the performance of sectors traditionally viewed as safe havens. As global economic conditions remain fluid, keeping an eye on sector-specific developments and broader moving average trends will be crucial for investors navigating these complex dynamics. The financial markets demonstrated notable gains, with major indices closing in the green, reflecting investor optimism amid favorable economic data. The S&P 500 rose by 1.03%, closing at 6,036, while the Dow Jones Industrial Average climbed 1.05% to close at 42762.87. The Nasdaq Composite outperformed, gaining 1.2% to finish at 19,529.95. This positive momentum is buoyed by the recent U.S. jobs report, which indicated a robust labor market with 139,000 jobs added in May, maintaining the unemployment rate at 4.2%. This upbeat market sentiment is further supported by a decline in volatility, as evidenced by the CBOE VIX dropping 9.25% to 16.77, its lowest level since February. In the commodities market, energy prices surged, with West Texas Intermediate crude oil advancing 2.21% to 64.77 and Brent crude increasing 2.0% to 66.65, following OPEC Plus's decision to boost output. Conversely, gold experienced a slight decline, falling 0.59% to $3,331 as investors gravitated towards riskier assets. The 10-year Treasury yield saw a significant increase of 2.64%, closing at 4.51%, reflecting market expectations of sustained economic strength. Meanwhile, the U.S. dollar index edged up by 0.47% to 99.20, amid ongoing global trade developments. Silver prices surged by 1.24% to $36.13, bolstered by investor demand for alternative safe haven assets. Overall, the markets are positioned for a potentially stable summer, as recent economic indicators suggest resilience in the face of global uncertainties. Applied Digital has seen impressive activity with a 145% share price surge over the past month, driven by strategic initiatives including significant lease agreements with CoreWeave and a $200 million equity offering. The company's momentum was further bolstered by an optimistic price target from B. Riley, reflecting confidence in its future growth. Tesla experienced a tumultuous period with a sharp 14.3% drop, followed by a 5.6% rebound, as retail investors took advantage of the dip. Despite executive turnover and geopolitical tensions affecting sentiment, Tesla remains a focal point in the tech sector's broader narrative. NVIDIA-backed CoreWeave stock saw an 8% increase, propelled by a $1 billion data center deal with Applied Digital. This partnership underscores NVIDIA's strategic interests in advanced computational capacities. Recursion Pharmaceuticals gained 20.13% recently, supported by the successful launch of its advanced AI model, Boltz-2, which enhances drug discovery processes. The stock has benefited from favorable analyst recommendations and a positive outlook on AI integration in biotech. Manchester United's shares climbed after reporting better-than-expected revenue gains, fueled by their UEFA Europa League performance. Despite posting a quarterly loss, the club raised its annual profit forecast, boosting investor confidence. QXO Inc. rose 13.43%, following a favorable investment firm rating and a strategic acquisition plan. This positions the company for significant growth in the building products distribution industry. D-Wave Quantum's stock has surged, reflecting investor enthusiasm for its newly launched Advantage 2 system. The company continues to attract attention with significant revenue growth and strategic technological advancements. Conversely, Lululemon's shares fell nearly 20% due to disappointing earnings and outlook adjustments, prompting analysts to revise price targets downward. Similarly, DocuSign's shares dropped 18.97% after cutting its full-year billing outlook amid a strategic shift towards AI. Braze Inc. also faced a 17.65% decline, despite beating earnings expectations, as market reactions to mixed results and strategic leadership changes weighed on its stock performance. As the financial landscape shifts, several companies are poised to capture attention on June 9th. Woodside Energy Group and Casey's General Stores are both scheduled to release their earnings results. Woodside Energy, an established player in the energy sector, shows an implied move of 3.65%, suggesting moderate market anticipation. Casey's General Stores, operating in the retail sector, anticipates a more significant movement of 7.14%, reflecting possible market volatility following its earnings announcement. VinFast Auto, a relatively newer entrant in the electric vehicle market, reports pre-market with a striking implied move of 14.62%. This suggests heightened investor interest and potential fluctuations, likely driven by its ambitious growth strategies and the evolving dynamics of the EV sector. Lufax Holding, a major player in the financial technology space, also has its earnings release on the docket, with an implied movement of 11.03%, indicating notable market speculation about its performance amid regulatory shifts in China's financial sector. Pax Group stands out with an anticipated implied move of 22.03%, highlighting potential significant reactions post-earnings. This level of implied volatility suggests that investors should brace for major announcements or strategic shifts. In the dividend space, attention turns to Alphabet, CME Group, SEI Investments, and Stephen Madden. Alphabet's dual share classes both declare a dividend of 0.21, maintaining its financial stability narrative. CME Group offers a more substantial dividend of 1.25, aligning with its strong cash flow position. SEI Investments and Stephen Madden provide dividends of 0.49 and 0.21 respectively, underscoring consistent shareholder returns. These dividends reflect ongoing commitments to shareholder value amid diverse market conditions.